This video will have a look at the Schedule 3 for T1 2024 and demonstrate that it has two periods. The capital gains inclusion rate was deferred, but CRA is maintaining the two-period reporting on the Schedule 3. Although there are the two periods on the Schedule 3, there is one inclusion rate for the whole tax year 2024, and I'll demonstrate that. There's several reasons for this. The inclusion rate could potentially still come in 2026. Slips might have been issued with the two periods. I'll demonstrate that. And there's the lifetime capital gains deduction increased effective June 25th, 2024. Disposition of farm property, for example, you need to know which period it was disposed of to get the proper capital gains deduction. The T3 Schedule 1 is similar construction to the T1 Schedule 3. Let's go have a look at profile. We'll look at the T1 Schedule 3. I'm in a 2024 T1. What I've done is made some entries. I made a T5 entry for capital gains dividends, which are reported as capital gains on Schedule 3. And we can see that there's two periods. So you might see slips where you have one period or the other or both. The other thing I did was I went to S3 details and I entered stocks and I've got a capital gain and it's in period 2. The other thing I did was I entered another stock. This I had in period 1. So let's see what that looks like on the Schedule 3. If I look on the Schedule 3, there's the Part 1 dispositions between January 1st and June 24th, 24. And I've got another stock there that I entered on S3 details. If I scroll down further, there's period 2 dispositions between June 25th and December 31st, 24. And I've got the other stock I entered. The Part 4, it summarizes the different transactions in the period, and I have them from above here, and then from the slip they're here. I've got a total for each period. If I scroll down, Part 5, the taxable capital gain, it adds the amounts from the two periods, and the inclusion rate is 50%. The inclusion rate for the whole of 2024 is 50%. Add the two together, get the amount on line 21. 50% of that is on line 23. And if I go to the T1, I can see it's reported on line 12700, similar to prior years. The line 12701 was implemented to deal with the inclusion rate increase, which is no longer in effect for 2024. So this is just a placeholder. If it's enacted in a later year, it's there and ready to go. So hopefully this explains why there's two periods. It's just a technical thing. And also for farm property, for example, where there's a capital gains deduction, you need to know what period it was in, what period the disposition was in. Just to show a reference here, CRA put out February 19th, update on filing information returns. And if I scroll down, there's this section about the instructions on the slip. While CRA is reverting to the currently enacted capital gains inclusion rate of 1/2, we are maintaining period 1 and period 2 reporting on the T1 and the T3. And then it mentions about the increases in the capital gains exemption, which applies for period 2 dispositions for qualified farm property, fishing property, and qualified small business corporation shares. Profile will apply the correct deduction for the capital gains exemption on the T1 if the period is indicated on S3 details. I hope you found this video helpful, and for more support options, you can go to our main profile website. It's profile.intuit.ca.